Good afternoon, traders. So we've just seen the Reserve Bank statement dropping. I'm not sure if we learned a huge amount, but we are very much data dependent, as we saw. Now, the market was obviously expecting the Reserve Bank to sit on their hands at 4.1%. We ascribed absolutely no probability whatsoever to a rate hike at this meeting. We priced at about 11 basis points of tights out to peak pricing in early next year. And that's kind of where we was potentially to see a move in the Aussie dollar, was that forward pricing relative to the urgency, to the outlook that came through in the statement. And if we were to see a move in the Aussie dollar, that's where it's going to come from. Now, what have we learned today? Well, not a lot, to be fair. The RBA are very much data dependent. We saw that in the opening paragraphs where they talked about this sustainable balance, this equilibrium that's been found between supply and demand after these aggressive rate hikes playing through. The market's trying to find itself. The economy's trying to understand how this all means and show its hand. And with that, that's going to take some time to evolve. And so they are sitting on their hands for a period of time. We are going to see this higher for longer playing out. This idea that the RBA is still seeing inflation as too high, that's true. But if you look at their economic projections that they came through in the Statement of Monetary Policy, they are expecting headline inflation to drop to 4.25% by the end of the year, and then to 3.5% by the mid 2024, before that peters down to target in 2025, with trim mean just a little bit lower than that point. They talked about the idea that we're seeing below trend growth. They're a little bit concerned about that, but if we go back to the Statement of Monetary Policy projections, they are looking for GDP to come out to about 1% by the end of the year, and then that should find a footing, and to December 2024 we should see that rise to 1.75% and then into 2% going forward. So GDP should look to trough around those levels and grow a little bit further at the same time while we're seeing the unemployment rate move to about 4.5% by mid next year. Now, they have talked about the idea about concerns that are playing through. They've talked about concerns around consumption. They've added a line about China and their economy there as well, something we've been focused on very, very closely indeed. And they've got a beady eye on what's happening in international markets as well. They have said that further tightening will be required, or could be required, but that's dependent on the data. So again, very much looking at that data dependency situation. Now, going forward, we are looking at that NAB business confidence numbers that comes out on the 12th of September. We may see some small volatility on that. We're also seeing a couple of days later the household spending numbers from CBA and also the employment rate. I think that could be an interesting one. On the 27th of September, we're going to get the August CPI numbers, that monthly CPI number. Again, that could feed into our idea about future interest rate hikes. And then the big one on the 25th of October comes through, the quarterly CPI number. And if we're going to get a hike in November, that's going to be where it comes from. Now, we do get Mr. Lowe speaking later on this week on Thursday at 1:10. So again, we might learn some more information playing through. But the reaction we've seen from markets hasn't been overly prolific, as we'd expect. We did see the Aussie trade 64.26 down to 17. And we're sort of just meandering a little bit higher at the moment. We saw the 3-year government bonds trade 380 down to 379. So a little bit of buying playing through there. But I don't think we've learned a lot. We're just waiting for new data to come through to make our mind up. This is a data-dependent RBA. The data matters.